The Indian benchmark stock index, the Sensex, is now fallen for 7 straight trading sessions, leading to investors' wealth erosion of almost about $120 billion. These losses have come after the Indian stocks suffered their worst weekly sell-off of the year on worries of aggressive interest rate hikes. The Sensex index has now dropped by nearly about 2,031 points, or about 3.31%, since the 16th of February. The total market capitalization of all companies listed on the Bombay Stock Exchange has plunged by nearly about $120 billion. Foreign investors have also turned net sellers, pulling out about $23 billion from Indian equities so far this month. Investors are cutting their equity exposure due to worsening global macroeconomic indicators such as increasing inflation, rising interest rates and also unpredictable commodity prices. Still, after steep losses, the Asian equities and Indian stocks have eked out small gains in early trade on Tuesday. And this was largely driven by the month-end flows, which lifted sentiment. However, worries about the future interest rate hike to temper the stubbornly high rate of inflation continues. What is also added to investor concern is the solid US data, which has driven the futures market to price in a higher Fed rate peak. The Fed futures shows that the US lending rates are likely to be raised by as much as 50 basis points in the next month. And that comes after data on Monday had showed that the US contracts to buy previously owned homes have risen to their highest levels in nearly about 2.5 years in the month of January. And core capital goods orders exceeded expectations in the world's largest economy, advanced last month. The solid data also follows the Fed's preferred inflation gauge, coming much higher than expected on Friday, and that adds to the growing consensus that the US Fed will maintain its hawkish stance for longer than previously expected. WION is now available in your country. Download the app now and get all the news on the move.